All right, welcome back to another video. Today I'm going over a back testing session of pretty much my thought process going into a trade, my pre-market analysis, how I get my draws and liquidity, and why I won't take trades, my conditions that I have to see in order for me to take a long or a short or even not take trades. So coming out of this day, actually, hold on first. This is November 5th, 2025. If you guys want to first back test and then watch me and see if you are getting your draws and liquidity right, or even just like entering a trade right. You know what I mean? That's what I used to do whenever I was learning and shit. But all right, coming into the day, I like to do a top-down analysis on the 4 hour. I see that we are respecting this 4 hour FEG, but we are also respecting this 4 hour FEG as well. Therefore, I am neither long or short, so I mark out draws and liquidity. This is a draw and liquidity because this is Asia low. This is at 8 o'clock. Therefore, this is the lowest point that happened during Asia session. And what do I want to put up here? 4 hour, nope. 1 hour. If I longed, I would want to see price literally rip all the way up there. I don't see any other draw that's prominent in my opinion. I mean, maybe like these 5 minute highs that we aren't even respecting out of anything. Maybe. All right. Let's see what price gives me for the day. Okay, longs, maybe. All right. Give me a retrace now. Retrace, thank you. No, I need a deeper retrace. Deeper retrace, thank you. Deeper retrace. 15. We are now in a 15-minute. Give me a displacement candle that gives me a proper RR. Oh, all right. I would have entered on this one, but this is fine, I think. Possibly. Okay, I'll put it at the body low. Okay, I most likely would have entered on this candle right here, strictly just because like this candle right here invalidates this little bit of a retrace right here. Look, this takes 1, 2, 3 candles to make this retrace. This takes one candle to pretty much clear this whole retrace. But in 2 candles, this is actually fine. But these 2 candles right here invalidates one. Well, here we'll do it from right here. 1, 2, 3, 4, 5, 6, 7, 8. You get the memo. About 10 candles, 2 candles over 10 candles. You see what I mean here? All right. Let's enter I TP stop loss. But normally I like to have my, if I would have entered on this, this is what I like to have it at, because this is the invalidation point of price. My TP would have been up there, but that's not the case scenario for this. So I put it at a 1-to-1. All right. All right, we are flushing a little bit. I'm going to trail my stops a little bit to right there. And TP. This was my break-even point. As you see, we didn't hit it until we actually took out TP. All right. But coming into the day, I wasn't bullish nor bearish, strictly just because, as you see, reacting out of this 4 hour FUG. And also right here, we were respecting this 4 hour FUG as well. But at 10 o'clock, we did close above it. Therefore, I could have looked for longs. I didn't even look at the time frame or anything. But at 10 o'clock, you could have seen that we did close above this. Therefore, I could have looked for longs just strictly based off of this 4 hour candle closure. And going to the 1 minute time frame, 15-minute. We are respecting and retracing down into a 15-minute. That's the lowest point of price that I probably that we would have went to. Go to the 5-minute, retrace into a 5-minute. But on the 1-minute, why did I not take any of these? First off, if I took this, yes, this is a good displacement candle. This was a little retrace. Then bang, this would have been there. This would have been, first off, a negative RR trade. And if you watch my other videos, I like to see a deeper retrace. Therefore, I like to see this. Not this. And that's exactly what this type of retrace was. This was a small retrace. This was too shallow, too short. I like to see a little bit deeper of a retrace. And that's what we did. As you see, there's fake displacement candles. This is a very good objective of a fake displacement candle because it had a small retrace, displaced, then your stop loss would have been right here. You would have gotten hit for your stop loss would have got hit, and then it would have ran to TP. So what did I wait for? I waited for a deeper retrace, and it gave me more confirmation because we came and retraced to a 15-minute FEG. That simple. Find a trend, find a retrace, find the right displacement candle. That's the easiest way to trade. I don't trade IFEGs. I don't trade CISDs. I don't trade any of that. I mean, I trade a little bit of FEG here and there. All right, next day. Remove drawings. 1 for 1. Oh, there we go. 4-hour time frame. What am I seeing? We did edge this 4-hour fair value gap right here. Bearish nor bullish. Why do I keep on messing up these words? All right, New York AM high, which is also equal highs right there. Okay, I am more bearish than bullish actually because as you see, we're respecting this 1-hour FEG off of Asia and off of pre-market, pre-New York session. What will be my low? This is Asia low. We do have London low as well. So what I want to see today is I want to see us retrace to one of these 15 minutes and then displace out of it. But obviously I need to see some trend first. Do not take it right away. No. 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 Okay, what is this? 930 low. That's a good draw on liquidity. So this is one of my conditions. In order for me to take this short, hold on. In order for me to take a short, I need to see this 15-minute closure below this point in price. This is a 15-minute candle closure. And as you see, every time we have came and we retraced, look, retrace, went up, retrace, went up, retrace, went up, retrace, possibly going up, but possibly not if we get a closure below this point in price. So we wait until 9:45 or 10 a.m. to see what, and as you see, now I'm not looking for shorts. Unless we close below that on 10 a.m. Okay. 10 a.m. 10 a.m. We closed below, and obviously we just took the drawn liquidity, but I wouldn't have taken any of this anyways because we did not get any deep retrace. Therefore, you stick to your rules. You don't FOMO into a trade. Yes, we did flush towards this drawn liquidity, but did not FOMO in, did not even force a trade, didn't do anything like that. Stick to my rules. Yes, I hit my drawn liquidity point in price, but oh well, that happens. Why force a trade? Why force a trade? Do we have any draws lower? We do. What is this time at? These are Untested London lows that we have not gotten yet. Come on. Come on. Come on now. Give me something, Q. Just put in this right here for right now. I'm not taking anything yet. I'm just putting that just in case. Give me something, Q. Okay, I like that. 5 minute. Okay, okay, okay. Mm-mm-mm. Okay, so what I would have done in this scenario is put a sell limit order at a certain point in price. If you go to my TikTok, I have a video in there from recently. I have a 5 minute candle closure. What I did is I put a sell limit. We closed below a point of price, which was a draw on liquidity. If we close below the draw on liquidity on a 5 minute or 15 minute time frame, I can enter off of 5 minute or 15 minute closures, but I have to have a positive RR. And as you see, I didn't just enter straight away off of this 5 minute closure because this first off would have given me a negative RR. And also, I did not get any sort of retracement or anything like that. But this is a perfect scenario. I would have put a sell limit at this point in price because this gives me a 1-to-1 risk reward ratio. So once price came back down and hit my sell limit that was at this line right here, at this entry point, it would have automatically entered me into a position. And therefore, I would have been in a trade. So let's see if it plays out. I would have been break even here. Break even trade. Because I go break even at internal highs or lows. So I just saved myself from a losing trade because that's obviously hitting my stop loss. Yeah. But that's what I would have done in this scenario. That's exactly what I would have done. Yep. All right. We're going to the next day. But if you guys don't understand that, comment below or DM me on TikTok or anything like that, asking me for more clarity. We can do a call. I can post a better video of 5 minute or 15 minute candle closure entries because those are literally, if you know how to do it perfectly, which I've gotten to that point, it will increase your win rate like significantly. It's crazy. All right. 4 hour, what are we doing? We are respecting this 4 hour right now. 1 hour, what are we doing? What are we doing? 1 hour FUGs. 3 a.m. All right, this is a London high. That's my draw on liquidity for the upside. But this is one of my conditions. I want to see a candle closure on the 1 hour, close above this point in price. And for my draw on liquidity lower, we have this 1 hour FEG. And we also have, time is that? 8 a.m. pre-market of the day. All right. Bearish nor bullish right now. Need to see what price gives me. Okay. Solid retrace. If we get this retrace into this 5 minute gap, that would be nice. All right. Come on. All right. I'm taking this. Wait. Yeah, I'm taking this. All right. All right. Bang, bada boom. Break even right here. Ho, ho, ho. Bang. That easy. That easy. Stop overcomplicating TS. Stop overcomplicating it. Bang, bro. Bang. And that's how you know that's a perfect take profit point. And that's a perfect draw on liquidity because look, we didn't go any lower. We are respecting this. This is textbook, bro. Call me Houdini something, bro. Come on. It's that easy. Draw on liquidity, trending price action, retrace. Those are the three things I look for. If you can find the right draw on liquidity and the right entry point, the right displacement candle, you are golden. Draw on liquidity is something that you will get right every single time if you know how to just mark out London session and Asia session, sorry, high or lows, data, high or lows, midnight open, 1 hour and 4 hour FEGs. All of these different things, those are draws on liquidity. Those are, I haven't had a day in the past 5 to 6 months where I have not had my draw on liquidity right. I don't think so. Could be wrong. But that's like the easiest thing you can do. You put a line on the chart. That is your draw on liquidity. That's that simple. If you can find out the draw on liquidity for the day, you are golden. The next thing you need, the only reason you should be wrong in a trade is your entry system. If you are wrong based off of your entry system, you are fine because that is something that you can work on. That's the hardest part of this model is finding what candle to enter on. Like it gets simple, bro. It gets simple. Make trading simple. Don't overcomplicate it. All right, new week opening gap. New week opening gap. 30-minute. This is my last day. I'm getting one more trade. Two for two. Two for two. Two for two. All right, on the 4 hour time frame, we are respecting out of this 4 hour FEG. Yes, we did close above this, but this is the next 4 hour FEG. So I need to see a candle closure above this point in price right here, or I do not take anything to the upside. And if I do, it would be that point in price because this is a actually, yeah, yeah, why not? But to the downside, what are my draws on liquidity? Okay, we have this new week opening gap. One sec. I'm gonna put this over there. All right. London low at 3 a.m. That is one of my draws on liquidity. And this 1 hour FEG is another one of my draws on liquidity. If we get a candle closure. Right. See what price wants to give me. Price want to hold above this 10 a.m. Well, I am open to longing now because look at the 4 hour time frame. We closed above this point in price. Therefore, I can now look for longs. It's that easy. Look at all of these untapped fair value gaps as well, bro. Like longs are going to be dominant today if we get some good volume. Holy, bro. Okay. Wow, holy slow price action, bro. All right. Shorts, maybe? Shorts. 5 minute, 15. Okay. Looking for shorts now because as you see, we did close below this 15-minute FEG. Give me some retracement. 5 minute. We are retracing to a 5 minute, but the 15-minute is going to close in 5 minutes. Let's see. Not convicted. Going to retrace into this 15-minute fair value gap. It's going to be up in here. Wait. Yes. Yeah, I'm right. Nope. Not taking that. All right, we took the drawn liquidity with no retracement. And it's 11:41. I would not be trading at this time. I trade from 9:30 to 11. That's all I do because as you see, volume dies down over time. Bro, I pissed so bad. All right, 4 hour time frame. We are respecting out of we did actually hold on. Right now, bearish nor bullish, because as you see, we did close above this 4 hour FEG right here. And then as you see, we did close below this 4 hour FEG right here. We respecting out of a 1 hour. We are respecting out of a 1 hour. Could look for longs possibly. All right, 3 a.m. London high. If I were to look for shorts, it would be all the way down here. That's far away. And then that's my next drawn liquidity up here, which is 8 high. Let's see what price wants to give me. I could see us going long today though. Ranging, ranging, ranging. Shorts possibly. Shorts, shorts, shorts. 5 minute. Did we retrace to a 5 minute? We did. Give me some good displacement here. I don't see any 15 minute to retrace into. I am going to take this. Stop loss. Take profit. Break even would be right here. If something happens, I'll let you guys know if it happens or not. You'll see what I'm talking about. Okay. Sell. TP. Highest point in price. Bada bang, bada boom. Okay. Now right here, I would not go break even here strictly because I can get wicked out and then boom. I would like to see some more displacement and some more. I would have been break even there. Why did I not do that? I would have been break even there because after this isn't like a flush, but this is more displacement than a retracement. I would have been break even here because I didn't think price would be any that like there would be no more reason in price to go back to that point in area.